extraordinary music.
What's going on, Masterclass family? This is your boy, Mr. Adams, bringing you the Black Friday trade of the day. A couple of great trades today, but one in particular that I want to make sure we do a review on is X Steel. X had an amazing day. We've had alerts on it all throughout the week. But let's take a look at its activity on Friday. Starting off with X on a 5-minute chart. The first thing that's obvious to us is something that's one of our requirements that's extremely important for any 5-to-1 trade or greater is previous day's consolidation. And as we can see on X, it consolidated all Thursday, forming a perfect gold setup, also known in the Masterclass strategy guide as a Beyonce. That gold setup transitioned into the aftermarket hours and the pre-market, which was yesterday on Friday. So Friday morning, this setup formed a gold married setup for us. Once again, tight consolidation pre-market. You have dual money flow in the aftermarket and pre-market, letting you know that smart money is interested in this stock. Okay. Now, what's really interesting, well, also what makes it married is we have the previous day's high and the pivot point in close proximity to one another, thus making it a married setup. When X opened, we had consolidation for a good 2 hours before it took off. First 15 minutes, X fell and it tested the red 200-day moving average along with a gold married support, being the previous day's low and the pivot support. So that's three significant levels of support that X held. If you were somewhat gutsy when X fell and tested those levels, you could have purchased there and you got all of your contracts at the dead lows if you believe that this support would hold. If not, here at 10:15, you had a small candlestick close above all the moving averages and the pivot point, which was an entry for you as well. You still would have some overhead resistance, but it's still a really great entry. And you had small, tight candlesticks the next 20 to 30 minutes. Then you had another small candle close over the previous day's high for another entry at 10:45. Then another small candle close over the pivot point at 11:15. So X gave you about 4 to 5 entries before it literally took off. I mean, gone from 40 to 43 in about 35 minutes, a $3 move. Quick pullback, which also formed a flag that tested the 10-day moving average, ran again, pulled back to both the 10 and the 20. Looked like it may break here. The market started to get weak, but it held, consolidated for another 30 to 45 minutes, and finished the day strong. Gold married setup, previous day's consolidation, dual money flow, ton of value. Now, let's take a look at X on the higher time frames. If we take a look at X on the 30-minute chart, first thing we can see here is it's above the cloud, which is one of our 5-to-1 requirements, being above the cloud on both the 30-minute chart and the 1-hour chart. On top of that, we have a silver setup with all of our moving averages together. And it consolidated for a good 3 to 4 days before the stock took off on Friday, and now forming another flag on the 30-minute chart. On the 1-hour chart, we have it above the cloud, the stock above the 200-day moving average, and all of these moving averages right here clustered together is forming a gold setup for us on the 1-hour chart. There's your squeeze, your consolidation over the last 2 to 3 days, and then boom, the stock took off while holding the 10-day moving average on both the 1-hour and the 10-day moving average on the 1-hour chart and the 10-day moving average on the 30-minute chart. Next, on the weekly chart, when the market fell off, X came down and tested, forming a hammer here on a 20-day MA on a weekly chart. Look at the week. Huge week for X there. On a daily chart, which is one of our most important charts to evaluate, market fell apart here. It tested the 200-day moving average, got somewhat of a bounce, but then it fell again. This time it held the 100-day moving average, which formed a high doji close here. And this is what I told everyone this would happen with the SPY as well. This was an entry for a swing trade. I'm going to draw a resistance level here or support. And the rule is if you have a doji on a support level such as the 100-day moving average and the stock continues higher and closes above that level, then it's buyable, with a close beneath this level being your stop. So you could have got in on X on Monday, Tuesday, Wednesday, Thursday, and obviously Friday. 5-day trade there. I originally got in on Monday, bought the 36.50 calls for 90 cents. Stock is now at 45. I've got majority of that move. If you missed the week, you got in on Friday, what would have caught your attention here is the doji on the daily chart, which is over a 10 and a 20, where the 10 is crossing the 20. So here's the doji on the daily chart. You could do the same thing. Draw the trend line on top of the doji. The moment that stock breaks above that level, it's buyable. And boy, was it really buyable here. I think some news came out with President Trump and some tariffs from steel, and that was a catalyst that aided the stock going higher. Let's take a look at the options chain for X. I mean, this is just phenomenal. Any one of these strike prices between 39 and 43 was easily a 20 to 1 or greater. The one that really caught my attention was the 41.50 calls. They opened up at 1 cent and hit a high of $3.79. $3.79 at 1. That's $379 for a $1 investment, plus commission, obviously. If you invested $100, you would have made $30,000 off of that trade. This is why we're here, folks. This is the Masterclass Black Friday trade of the day. So this is what we're aiming for, these type of trades that are life-changing, not just for me or Matt or John. I mean, for everyone. Anyone can do this if you're willing to put in the work. I just want to do a quick review on Berkshire Hathaway. As many of you know, that was a great trade for a lot of us, those of us that, and just show you what I saw in Berkshire Hathaway that caught my attention. Looking at Berkshire Hathaway on a daily chart, what caught my attention is a couple things. The first thing is the stock had been at a high of 217.62 and is beginning a rebound. Lately, Warren Buffett has been doing a lot of new buying a lot of new shares. And they have weekly options. I didn't know that they had weekly options. Berkshire Hathaway had been holding the 100-day moving average, and then it held both the 10 and the 50-day moving average on a daily chart. I saw this on Thursday night. With the 20 above, I felt that would be a potential target to around 206, 207, which is about a $2 to $3 gap before it continues to move higher to 217. On the 5 minutes, so I saw that it was forming somewhat of a silver B setup on a 5-minute chart. It wasn't ideal, it wasn't a goal, but I had noticed in the pre-market that it held above the previous day's high, and so I set an alert for the previous day's high. The stock crashed below that for the 15, 20, 30 minutes, and right here at 10:05, my alert went off that it's back above the previous day's high. So I decided to buy a bunch of contracts for 27 cents, with the target being this pivot point. This is a separated setup here where the pivot becomes your target. Ran right to the pivot, and that simple move, which is about $1 or so, gave me a 5 to 1. The 205 calls went from 27 cents to about 130 high. I got out at about 125. So that was the Berkshire Hathaway trade. Plus you had dual money flow that was strong pre-market and during the market. And so the trade worked. Masterclass, dominate.